Hello. Welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. Happy 2022, friends. We made it to another year, and we've got a lot to talk about today. I want to show you what's going on in the market and on-chain, but then also we will talk about my expectations for this year. I wrote up a market thesis on Twitter, and I'd like to lay out some of what I'm seeing here in this video so we can discuss it together. So I hope you're ready to blast through some data. If you enjoy my content, make sure to give this video a thumbs up and subscribe to my channel. To find out about all my videos the moment they come out, make sure you enable the bell icon. So let's jump into it. Not much has happened since the last video we made. The market is insanely quiet. We also still haven't tested the low of the liquidation candle from December 4th. We've talked at length on this channel about price's tendency to test liquidation lows, and I'll leave a link in the description for you to check out the previous time we talked about this. I think as long as we are this close to the bottom of this range, a dip down into this area is still possible. What I would be concerned about is if we got all the way back down here to 42 and then we slowed down. If we got down here and price started losing momentum, it would become a very enticing move for big money players to give us just a little bit of a nudge. And I think if we did have that, we'd get a quick cascade down into the upper 30s. So why is that? Two reasons. One, this liquidation wick right here means that there are a lot of traders with stops right underneath here. Also, this is 40,000. There's probably also a lot of traders with stops right under this psychological level, this nice round 5-digit number. And just as we had on December 3rd, which we talked about on this channel, being a very juicy place for market makers to manipulate, this also would be a similar situation. We talked about, if you'll recall, in my video Blood on the Water, I'll leave a link in the description, where we reviewed this liquidation. We talked about how this level, this 53,000, was a very important pressure point for the market. It represented a couple of factors. It was the top from September 7th, which was a dramatic liquidation day of its own. Took us a month to recover, and that level was right here. Also, at the time, this marked the short-term holder cost basis. That's an on-chain indicator representing the cost basis of the newest holders of Bitcoin, folks that have bought in the last few months. And this level was threatening to send them underwater as a group. So as we tested it and then came back down to test it on December 3rd, it became very enticing. We saw some big money players give a little bit of a nudge on Friday in a low liquidity environment after an expiration day for options. And what do you know? Liquidation. Something similar could be setting up if we find ourselves down at this level. Just something to keep in mind, because it's right at 40,000 and at the liquidation wick. And there's going to be a lot of traders right in here with stops who don't want price to go any lower. Now, they may come in and defend this level. You know, if we get down here, they may come in and start bidding it back up, and there'll be a little bit of a war. These little battles are what really make markets. And it can be stressful to try to predict what's going to happen in the micro term. But this is one scenario to keep in mind as we move forward. So a check-in with our futures market. So open interest in the perpetual market is now at all-time highs in BTC terms. We've got it in USD denomination over here. It's not at all-time highs, but it is in BTC terms. It's now broken above its highest point, and it's just been rising aggressively now for several weeks. But curiously, the funding rate itself is not really moving. See this 0.01% level right here? This is like a market neutral for funding. And anything inside of here is showing that there isn't a clear bias to the long or the short side. But we've got all this record open interest in perpetuals. So how do those two things vibe? My interpretation of this right now is that we've got obviously a lot of activity in funding, but since there isn't any kind of bias being demonstrated, I feel like a lot of this activity are delta neutral traders, arbitraging inefficiencies between the markets, trading contracts across exchanges, and not really pushing any kind of biased agenda. The fact that we have spent this entire liquidation range since December 4th without funding ever once pushing above neutral shows that A, we do not have a lot of aggressive longs, but it's obvious we still have a lot of activity. So my conclusion then is, as I stated, I think this is a delta neutral ARB play going on. There's no clear direction. I don't know how you could look at this funding rate right here and decide, oh, it's going up or down. It's very muddled. There's not a lot of signal here, but it's clear that there are shorts and longs in this market. You can see on the liquidation charts, they're getting pinged every time price goes in a direction. Somebody's getting liquidated. So there's a lot of action on both sides. We have a question from one of our viewers. Jason says, I still don't understand how the funding rate influences spot price. Let me give an attempt at answering that for you, Jason. So as we've described, the spot market is where you buy and sell physical assets. So if you go to Coinbase and you look at the Bitcoin price where you can buy or sell, I'm not recommending Coinbase, but if you go there and you look at the price, you're looking at the spot price. The futures market has its own price, its own index price, and it tries to trade as close to the spot price as it can. So the funding rate itself does not affect price for spot Bitcoin. The funding rate charges a premium to traders in futures. And depending on the aggression of longs or shorts in futures, the funding rate will move to change the premium and incentivize traders to take the other side of the market bias. The way that futures can affect the spot market is in one of two ways. The first way is through collateral. So futures contracts can be collateralized in two ways, with either Bitcoin, where you're collateralizing with the asset you're trading, or you can collateralize with cash or stablecoins. When you collateralize with Bitcoin and your futures contract is closed, your collateral becomes an order. If you were a short and you sold your futures, the closure of your position becomes a buy order for your collateral. If you're a long trader, a closure for you becomes a sell order. If there are enough long traders with Bitcoin collateral who get closed at the same time, that's a lot of sell orders hitting the market in the same place at the same time. That's how you get liquidation cascades and quick price movement. But the amount of futures open interest that's collateralized with Bitcoin is reducing. It's down to about 40% from a high of around 70% in April. And it's been reducing because more and more exchanges are offering cash settled futures. They're less volatile and slowly becoming more ubiquitous. So the impact of individual traders' BTC collateral affecting spot, that aggregate impact is diminishing as fewer and fewer contracts use BTC collateral. The second way that futures and spot can interact with each other is more psychological and nuanced. So there are traders that arbitrage the differences, the inefficiencies between the spot price and futures prices. A lot of algo trading bots do that, and a lot of traditional futures guys do that. But there are also a great many traders who simply watch both markets to get an idea of momentum, where the aggression is amongst the different traders. And a quick move in futures can cause people in the spot market to make new decisions. As those two markets are linked and they try to trade closely to one another, a big move in futures often belies a big move in the spot market, aided in part by the liquidation of positions, the closing of positions with BTC margin, also aided by those traders who arb the two markets together, making different decisions based on how price is changing, and big money players who see opportunities to leverage pressure points, just like we had on December 4th. Those are the ways that futures and spot affect each other. It's not direct, and the funding rate itself does not play a role. This is really telling you where the bias is in futures and who is paying whom for the privilege of keeping their position open. I hope I was able to answer your question, Jason. You're one of my regular viewers, and I see your comments often, and I've got no doubt you'll let me know if there are still questions. I do want to touch on exchanges a bit because I've seen some noise on Twitter about it. We've gotten some inflows to exchanges recently, but these inflows have been met by relatively equal and opposite outflows. At this time, I'm not concerned with the activity I'm seeing with exchange balances. If we look at the total balance of all exchanges, it is pretty much sideways since May. It went up, it came back down, and it's just stayed in this area. You could argue that there's been a bit of an influx recently since mid-December, but it goes up and then it comes down, kind of zigzags around. so it's inconclusive at this time and not yet concerning. If we look at individual exchanges, there are a couple of them that are seeing inflows. Now, typically exchanges kind of all behave at the same time. They'll all see inflows at the same time and they'll all see outflows at the same time. But in the last few months, we've been seeing a little bit of a deviation. Binance has been growing a fair amount, and so has FTX. You can see it kind of the pink ballooning out here. I'll take off Binance. You can see FTX grew quite a bit, pulled back, and is now bouncing around. But these two exchanges have been absorbing quite a bit of users, and they've been making some noise. But if you start lumping in some of the other bigger exchanges, like Huobi, like Gemini, like Coinbase, the balance then starts to look more flat. It looks a bit less concerning. Let me take off Coinbase and Gemini. What I think is happening is that traders from China are moving to Binance and to a smaller degree FTX. So China has been cracking down on crypto exchanges. And at the end of 2021, there were a bunch of exchanges that were having to pull service for Chinese customers. Huobi was one of them. And over the last few months of the year, Huobi saw their exchange balances falling precipitously, while the global exchange balance was relatively flat. You see that? It's pretty much sideways. But Huobi, which had over 200K Bitcoin at one point, non-trivial, has been just solid outflows. And my theory has been that Binance, having inflows of similar amount, is largely absorbing this group. Maybe FTX even to a lesser degree. But I think that there's some nuance going on inside of this level for exchange balances. And looking at only Binance would make it seem like we're getting a bunch of inflows to exchanges. But again, take a step back, look at the total contextual picture, and you'll see that there's not yet a behavior that would give us cause for alarm. So I want to touch on something I posted on Twitter. Over the weekend, I shared my 2022 market thesis. This was an exercise I did to try to bring together all of the different ideas and perspectives that I think I have about the market and see if I could make a cohesive framework for what I thought this year might look like. I also want to point out that this is my first time really trying to do this, trying to cohesively bring all of my thoughts together into a market prediction, for lack of a better word. And I've gotten a lot of feedback about it since I shared it on Twitter. In my thesis, I express that I feel that the upside for Bitcoin and many other assets that are near their highs is limited in the near term, meaning maybe the next half of the year. And I'd like to explain that a bit more for you guys, my viewers, who may be wondering why I don't think there's a lot of upside in the near term, even though we talk often about a lot of very encouraging on-chain dynamics. First of all, let's establish the market for Bitcoin itself the past year. As we described in the year in review video that I shared the other day, illiquid supply types, hodlers, long-term holders, all the groups that have the majority of supply that we consider smart money, they were growing their share of supply for most of the year, basically since the May sell-off. Also, if we look at long-term holders, they spent in the winter and spring of last year and then began maturation again throughout the summer. And their distribution at the top, as we expected, was there, but it was very muted and controlled. So we're seeing older hands with a reticence to spend, holding on to their supply as price crept all the way back up to all-time highs in the absence of retail demand, proper euphoric retail demand. As we've expressed on this channel, on-chain activity declined heavily after the early part of the year. And from this point in May onwards, we were in a bear market. Now, the price action was bullish, and there were moments where it was a straight up bull behavior, price just ripping. But broadly speaking, from May to December, still had the profile of a traditional bear market in the sense that many traders were just looking to get their money back. Short-term holders tended to stay underwater for long portions of time, and every time they'd get back towards their cost basis, they'd find themselves underwater again. That kind of behavior is indicative of a bear market, as well as the heavy accumulation we've been seeing. So right now, Bitcoin is in a unique type of bear market. And when I say bull and bear, it can give people the wrong impression. I don't like to focus on those words. I like to focus on the market behaviors underneath. And the reason that we were able to make new highs was because people just weren't spending their coins. Most of the spending has come from inside the short-term holder group, which means that Bitcoin is churning around amongst new investors again and again. And the older investors, the ones who've been around the block, who have experienced these ups and downs before, they are just slowly picking up up more and more Bitcoin, waiting on the sidelines and watching all of these short-term mouth breathers dump their stacks. So all of those things have been happening, and they set up a very confident few months of continued accumulation. I think it's reasonable to expect, after the year that we just had, where illiquid supply continued growing despite various moments of weakness and uncertainty, despite liquidations, despite bad news, they continued buying Bitcoin. And I expect that that dynamic will continue into 2022 regardless of what happens. However, valuations in traditional markets are untenably high, especially the upper crust of the S&P 500, which tends to be dominated by the biggest tech stocks. The S&P has been reaching all new highs on a weekly basis. And it's my belief that future growth is increasingly unlikely without a proper market correction. Now, when I say correction, that language can be scary for people, especially if they don't have a lot of market experience. But it's important to understand that corrections are a natural force in markets. They occur cyclically because number cannot go up forever. It must come back down occasionally to relinquish weak hands and allow value entries for new buyers, because markets thrive on momentum. And when you get momentum in one direction for too long, eventually the rubber band snaps and there needs to be a reversion. So why do I feel that Bitcoin's upside is capped? Why do I feel like it has a limited growth potential from here in the short term, as I described in my thesis? This is the Bitcoin market cap going all the way back to 2017. I'm going to throw a Fibonacci retracement and extension tool on here. Note that Bitcoin reached a full 4.236 Fibonacci extension in the fall of this past year based on the top from 2017. It took multiple years to get there, and there it is. Boom. Now, when an asset reaches a full 4.236 fib extension, that usually means it's the top for a period of time. What that drawdown looks like varies by asset. This chart is almost sacrilege to show to Bitcoin maxis. No one wants to talk about the fact that we have now reached a full Fibonacci extension. Now, I will couch this and say that I am not the originator of this discovery. I learn a lot from others, and the analyst that I saw point this out is blockchain backer, and he's been talking about this for almost 2 years now. So full credit goes to him for calling a $69,000 to $75,000 top for Bitcoin a very long time ago, and he frickin' nailed it. Here is that Bitcoin chart in the top left. The other three charts are the three major indexes. On the right, we've got the NASDAQ index, bottom left, the S&P, and on the bottom right, the Dow Jones. And all of them, as you can see, are nearing or have reached Fibonacci extensions for their own cycles. The S&P and the Dow are both based on the global financial crisis of 2007 and 2009. That is what set the baseline of this cycle for this Fibonacci. And as you can see, the S&P reached theirs already. The Dow still has some room, and the NASDAQ still has some room. The NASDAQ Fibonacci is based on the tech bubble from the early 2000s. It took almost twice as long to play out. So what does all this mean? Well, I believe it means that the markets are in for a correction this year. I think we still have a few more weeks and months to go before we reach that point. And my expectation is that until we reach a moment of maximum cabin pressure, when the risk-reward profile reaches its breaking point and the market incurs a proper correction, I think we still have several months to go before we actually reach that moment. But the fact that we've got all three major indexes approaching a similar cyclical top at the same time, and Bitcoin itself reached one, it leads me to feel that we have gotten to the top of the current market's potential without experiencing a proper pullback. Now, there's a lot of directions a person could go with this information. Now, for a major index to reach a full Fibonacci extension implies that the drawdown would be severe. In the middle of this cyclical run, the S&P experienced a drawdown that brought it down to the Fibonacci golden ratio of 1.618. Same thing for the Dow, and even to a lesser degree the NASDAQ, but it's kind of operating on a longer timeline even. But both of these had their pullbacks to the 1.618, which gives a lot of validity to this greater cycle theory. For all three indexes to have reached their full Fibonacci extension around the same time that Bitcoin did, and around the same time that the total crypto market did, All those things are lining up for a correction in the conceivable near term. Now, I think that the S&P is probably more likely not to continue achieving new highs. Now, it may achieve minimal new highs from here, but I actually expect it to be relatively contained near the top of this range for the next couple of months. I'd be surprised if it just continued shooting higher. And I think that while it does that, we will wait and see the Dow and the NASDAQ creep up to these top levels. And in that time, I expect Bitcoin to be trapped in this range between its high and low of last year. I think it's possible that Bitcoin could reach up and make another high, but if it did, I expect it would be short-lived, just like with the S&P. And it's because there's been so much money pumped into the market in the last 18 months. And so far, there has been no opposing force to that momentum. Every time the market gets knocked down, Fed liquidity steps in and we pump it right back up. So what I think is going to happen over this next 6 months or so is that the S&P will not go much higher or much lower than it has. It's had its fun, but there's a lot of assets in the S&P that have been left behind by the upper crust of the index. You know, the top 5% or so of the S&P has been doing really well, while many of the other tickers have been left behind. So that risk-reward disparity to me suggests that traders over the next few months will start seeking yield in many of 2021's neglected assets. Many of the stock tickers inside the S&P that were left behind by the upper crust reaching new highs, I think those will start to see gains, but it may not push the index up much higher. A lot of the more labor-intensive industrial sectors that make up the Dow, they still have room to make gains, having been held back by the supply chain issues we've been experiencing. And the NASDAQ as well has a bit more room to run. If the Fed stays on schedule and completes its tapering in the spring as they expect, I anticipate they will try 1 or 2 rate hikes after that. But I don't think that they'll be able to meaningfully raise interest rates because of the exorbitant levels of debt. They would absolutely crush the middle class, and the markets would not like that. So I think the Fed will attempt a couple of rate hikes, the markets will wobble, and that will be a catalyst for the ultimate air to be sucked out of the balloon. Having said all that, what do I think it means for Bitcoin? I believe that over the next few months, Bitcoin will largely stay in this range that it has been in. It may make a new high briefly, but I think it will be short-lived. And I think we are in for a bit of this kind of sideways action because we don't have retail demand. This isn't a place that is inviting for new retail to show up, barring some unforeseen news catalyst. And if we are to see this behavior play out as I expect, then I anticipate a continual growth in illiquid supply. Bitcoin will be taken off the table throughout this entire process, all the way up until it is over 80% of supply. Here is a look at illiquid supply as a percentage of all Bitcoin. And right now you can see it's about 76%. I anticipate over the next few months this value to continue rising while price goes sideways in this area until we reach a point where all of these indexes have capped out. The S&P, as we stated, already has, but the Dow Jones and the NASDAQ have got a bit more room to go. And I believe, again, these are just my views. I am simply a dude on the internet telling you what I think will happen. That all these indexes will reach their maximum cabin pressure point and we will have a correction of 20 to 30% across all assets, including Bitcoin. Now, if we were to experience a 20% drawdown for Bitcoin, that would put us in the high 30s. That would put price somewhere down here. Despite my expectation of a drawdown, because illiquid supply is likely to continue growing, because long-term holders are likely not to spend their coins, we're looking at an epic supply squeeze building over a series of months. And if we do incur a drawdown that is at all resembling March of 2020, I expect Bitcoin to lead the recovery just as it did right here. Perhaps even more aggressively because we know that supply is being restricted at a level that it was not being in March of 2020. So let me step back and pull this all together. Bitcoin hodlers are continuing to do hodler things, carrying a dynamic that began in May when the bear market for Bitcoin began and thus far has not yet ended. We reached all-time highs in bear market conditions, which has never happened before in Bitcoin. This market is changing. But we also know that indexes for the Western markets and Bitcoin have reached the tops of what usually marks a cyclical high. And because of the current quantitative easing climate that we're in, I expect that whatever drawdown we experience this year as a result of these capping out of indexes, I anticipate the fall to be short-lived. And I expect the Fed, having already rattled markets from completing their tapering in the spring and attempting rate hikes, would step in with liquidity to prevent a crash from getting worse, which would lead to a very swift recovery similar to March of 2020. If that were to occur, because of the intense hodling behavior we're seeing from Bitcoin, I expect that it would lead the recovery, just as it did in March of 2020, perhaps even more aggressively because of the illiquid supply change that we've been witnessing for the last calendar year. I do expect that if Bitcoin stays in this range that I'm describing, that over the next couple of months, a lot of altcoins could have some fun. When Bitcoin ranges and shows weakness, the rest of the crypto market tends to rally. So I think it's very likely, as I described in my thesis, that we may get an altcoin bonanza for a couple of months while Bitcoin still hangs around near its highs. And barring some news catalyst about institutions opening up to Bitcoin or something extremely bullish of that nature, I don't see casual retail coming to Bitcoin anytime soon, which is why we cannot realistically expect price to just start ripping back to the upside. It's part of why I expect any new high, if created, to be very limited, because I don't think it will have enough momentum to break through the spending that occurs at new highs. That's the reason we pulled back in November. So I know I'm expressing a lot of ideas here. It's probably a lot to take in. I'll leave a link to my thesis tweet in the description below if you'd like to go read the thread in full. I highly recommend it. It will help you understand my perspective, and I'm glad to answer any questions you may have about it. It's important for me to crystallize for you that I don't anticipate the next correction for Bitcoin to be a multi-year bear market. Traditional Bitcoin bear markets occurred in a very different climate for the asset. The types of investors there were very different in the past when we would experience these 80 and 90% drawdowns. The types of money that are in Bitcoin now, the types of institutions that have taken positions, and the variety of instruments available for traders to express leverage against price is broader now than it ever has been, even more than 18 months or 2 years ago. All of those factors weigh against the likelihood that Bitcoin would see an 85% drawdown. I personally don't think that that's likely in the future. I think what we experienced in May is about as bad as it can get, 50 to 60%. And I don't even know that the next one would be that big based on the hodling and accumulation behavior that we saw this year. In the short term, we are still keeping an eye on derivatives. Though they haven't shown us any clear bias, it's clear there's a lot of activity going on, as open interest for perpetuals is at all-time highs in Bitcoin denomination. So in the coming days, I will be watching the futures market pretty closely, but I think that we are in for more of this ranging crab price action. People don't like to hear that. It isn't sexy. I probably will have less views on my videos when I don't talk about exciting and volatile things, but I have to shoot it straight with you. The futures market is not showing a clear bias. Price is still chopping around in this same area. I do still leave a window open for us to test this liquidation low as long as we stay in this range. And it could be healthy. But what I don't expect in the next couple of months is for Bitcoin to rip all the way back up, make new all-time highs, and then shoot to the moon. We could see a flash down, some liquidations, a quick rally back up, then some selling, and then it comes back down. That seems more likely to me than an immediate reversal here and moon math. But as I expressed in my thesis, and as we've looked at here, I do expect that if my thesis plays out to be true, if I end up getting some of it correct, and we do have a major drawdown in the markets in the second half of the year, I expect Bitcoin would hold up well and lead the recovery faster than all other assets because of the continued restricted supply by strong hands. That is my market perspective as of now. I know we went through a lot, and I'm happy to take any feedback you have about my thesis. I think it's important that we talk about these views together and we challenge each other on our perspectives. It's the only way for us to grow and become better at our trade. I think there's a lot to be positive about for Bitcoin. There's a lot of amazing development happening in the space, and its potential as a future hard money asset for the world has not wavered at all. But in the relative short term, the next few months, I honestly don't expect a lot of wonderful price action. I think we're in for some ranging from Bitcoin. We're in for a bit of an alt season, though some of the blue chip cryptos that already experienced their highs may just languish in their current levels without seeing a lot of movement. And then later this year, we experience a proper drawdown when the risk reward proposition simply becomes unmanageable and the market needs a pullback. When that happens, Bitcoin will be there with its supply restricted and people looking for a safe haven to store their wealth in times of uncertainty. It will be there waiting with open arms to lead the recovery, which sets up a potential bull run near the end of the year or in 2023. Make sure you follow me here on Twitter at TXMC Trades. That's where I posted my market thesis. That's where I post charts that don't make it on YouTube, and you can ask me questions and chat with me there. I hope I was able to lay out a cohesive picture for you today. There was a lot of different factors to discuss, and sometimes when I'm rattling it all off in my monologues, I wonder if I've left something out. But I want you to know that none of my confidence has been shaken. The events I'm describing for you that I think may happen are natural events in markets. I hope you all had a wonderful New Year's weekend. I've already accidentally called this year 2021 a half a dozen times, and it'll probably be a few weeks before I remember that we're now in 2022. We will chat again in a few days. We'll give the market time to play out, and maybe we'll have some other cool charts to look at that normally get neglected when Bitcoin's giving us a lot to discuss. Until next time, be kind to one another, take care of yourselves. We will chat again very soon. Cheers.